Yo, how's it going, fam? Mauricio with you guys once again, November 17th. I saw a lot of comments, and a lot of the comments were talking about how to identify a point of interest. Now, before you go into identifying a point of interest, you want to know where is that point of interest, intended to be, and what time zone are you trading with. Time zone is actually very important. Time zone is one of the most important things to know when it comes to trading. Now, before I go into it, I'm going to go ahead and show you exactly what are some of the things that I look at when I'm trading New York session or London session or even Asia session. But before I get into that, again, please do me a favor and gently hit that like button. That is the only thing I ask for me to continue on uploading more videos, to continue on educating you guys for free. So all I'm asking for is go ahead and gently hit that like button, hit that subscribe button, and that bell notification, so that way you can be notified the next time I send out a video, so that way you guys can go ahead and learn as fast as possible. I'll more than likely also soon be trading live on YouTube, so that's going to be very interesting. With that said, I recommend you guys to hit that bell button and subscribe, and overall, gently hit that like button. So let's get right to it. When it comes to this pair Euro USD, I was actually trading this trade. I had it out, but I actually didn't jump in this trade. I jumped onto this one, and I'll show you guys why. But before I go into that, I want to show you guys over here what was going on. Now, right here, I have a certain zone, right? I have something marked out, which was the time that I trade live with a lot of my students, a lot of the people that jump onto my live sessions. Now, right here on the 5-minute, you can't really tell much, right? You can't really tell much, but one thing you can tell is this right here. You see this price action, you can see that there's a very nice tweezer bottom. Not just that, but over here you have this wick, so it looks like market was coming into an even low level, right? And this is what I was paying attention to. A lot of people typically just stop at the M5 time frame, but you want to understand that you want to go to deeper time frame. You want to be able to find what's on the smaller time frame to see if you can identify certain schematics. And now these schematics you're going to be identifying on lower time frame, either on the 5, 3, or 1 minute time frame. And that is how we're able to go ahead and get these entries, these very precise entries. I'm going to show you guys something over here real quick. Now, one thing you want to understand is that you want to trade at a certain time. The more likely you are to trade at a certain time every single day, the more likely you are to find those details, right? If you're trading London session, stick to London session. If you're trading New York session, stick to New York session. Why? Because the more you stick to these sessions and only these sessions, the more likely it is for you to identify certain patterns or certain things that the market does over and over repetitively every single day. And one thing I've noticed that it does every single time, it can either be on Euro USD, it can be on USD JPY, USD CAD, any major pair that goes along with the USD pairs that move throughout the New York session. They like to create liquidity. Not just that, but they also create divergence. When I'm able to find divergence, just as you can find right here, market going down, market going up. Once I'm able to identify that market has created divergence, I'm able to look for certain things, and these certain things are going to be areas of liquidity. Just as you guys can see right above over here, we have liquidity that has been resting right above. Now, market did create some very nice price action in this area, which is also known as tweezer bottoms. Now, understand that when market did those tweezer bottoms, we had already confirmed that there was divergence on the market, right? We had some bullish divergence going on. When market moved to the upside, it took out the liquidity, which is right above over here, took out this liquidity, which is now verifying us that market can now potentially shift in momentum. Now, typically, understand that the banks operate pretty similar to how we operate, right? When we go to a store, and we see something at 50% discount, we immediately try to go and buy it, right? If we see it as non-discount, we don't really pay attention to it. So same thing with the banks. If the banks are looking at certain candles that are being formed with either bullish, bearish price action, and they see the market come back down to a discount level, which you would consider as a 50% level of a Fibonacci retracement, or of that candle, you would consider it as a discount. So this is where banks or institutions try to hedge their entries into the market. Now understand that this is the candle I'm paying attention to, these tweezer bottoms. Now 50% of that candle is right about right there, and as you can see, market had come into that zone, and then after that we had a huge rally to the upside. Now during that rally to the upside, my first target was going to be the highs of the market before it started trending down, so right over here. As you can see, we had a very